Hello traders! First of all, happy new year! I wish you a lot of breakthroughs, I wish you a lot of profits, and I wish you that you are the trader that you want to be this year. Take the right actions, take the right trades, be that person who is actually profitable, and I wish you tons of success. Now, welcome also to the Weekly Outlook and Setups volume 270. We are just about to get into the market right now. The first week is out, December is out. We're going to start getting the NFPs this week. We're going to start getting all the news. The market is going to return back to normal. So it's very important to take it a little bit easy right now, especially within the first weeks of January. January is usually a choppy month, and we're going to be having Trump being officially inaugurated, I think, on the 20th of January. So let's jump into the market. Let's take it easy. We're going to break it down from the monthly time frame, everything in detail. So let's see how the market is looking right now and what we can expect. Quickly glancing over the economic calendar, we have pretty much NFP on Friday. That is the highlight of this week. Monday, not as much. We have this German CPI. Is it going to bring a lot of volatility? Maybe, right? Then we have the services PMI here for the US dollar. Tuesday, services PMIs here, right? And job openings. This is going to be potentially very nice, but maybe not as volatile as some other news releases are. ADP employment change here and unemployment claims on Wednesday. Looks like a very nice day here. We have the FOMC meeting minutes. This is not very important usually because this is just the minutes. It's not the actual FOMC meeting. Then we can see on Thursday, it's quite dead just before NFP Friday. All right, so for me, Tuesday, Wednesday are going to be the high probability days because we have those USD news. Then Thursday potentially could consolidate a little bit, and then NFP is going to come out. It's probably going to shake the market a little bit. You can see the expectations are quite big, right? We had 154K jobs created, right? Sorry, is this the... No, sorry. The previous one was actually quite big. 227K, and right now we're forecasting a lot lower, right? So if the actual result is very different than the forecasted one, that is really gonna impact the dollar. So we're gonna be watching out for that. But overall, the first weeks, usually the NFP weeks, we gotta take them slow. We gotta really get a feel of the market, let that NFP come out of the way, and then of course start trading properly within the next weeks. But of course, I'm gonna be focusing every single day apart from Monday. Really gonna allow Monday to pass. And then Tuesday, Wednesday, Thursday, and Friday are going to be trading days for me, slowly getting back into the zones. So let's head for the market. Just real quick before we jump into the charts, make sure to join my free trading Fanatics community. It's an amazing community with a lot of value, a lot of exchange of ideas, but not to say the classroom. This is a course that I've never shared before, even stuff on YouTube. So make sure to join. It's the first link in the description. You're definitely not going to regret it. All right, as usual, getting started with the DXY. I might be a little bit clumsy because this is the first time that I'm looking at the charts for probably 2 weeks. Now, how we close the month is with a monthly bullish imbalance, suggesting that currently the buyers are in control. You can see the last 3 months were quite impulsive, very bullish dollar. We've had a lot of shift of sentiment. We've had a very nice bullish dollar, taking a lot of liquidity levels. So we had overall, you can see this overall consolidation for quite some time. And right now, pretty much since Trump got kind of elected, since that period, right, we actually had a very nice appreciation of the US dollar. Looking to the left, there is nothing much to stop it, right? So can we start targeting levels like this? Definitely not. This is way too far. But currently, where are we sitting in on the monthly time frame? If you really zoom in, we're sitting in at a high. What does that mean? Well, we could potentially maybe make some sort of a pullback. Do we have anything to pull back on the monthly time frame? Well, we have this monthly breakaway gap. So I wouldn't really expect for the market to pull back all the way down there. So I'm immediately going to transfer onto the weekly and see if there is actually something there. What I immediately see is the first thing that I'm usually looking for is for momentum. And I look at momentum right now with imbalances, right? We have this weekly bullish imbalance being created. You can see here the week of Christmas was pretty slow. And then this week actually popped very nicely for the first week of the trading month. Very nice volatility right here, making a new high. But didn't really pull back into the weekly, which is something that I don't really like. We're also having that weekly order block that we can plot in right here. So this is a very nice support level. This is a very nice demand level that if we eventually pull back into it, we can start looking for longs. But again, this right now, this weekly imbalance is starting to also look like a breakaway gap. This is like an imbalance that does not really get pulled back into. So then I'm going to transfer onto the daily and see if we have a daily level. Well, yes, we do. We actually closed the week by a creation of a new daily bullish imbalance. Okay. And you can see right now, it's really nicely bullish. We're having a monthly bullish imbalance, we're having a weekly bullish, and we're having a daily bearish. So you can see everything is just pointing to the upside. So I'm definitely bullish. I'm definitely bullish on the dollar, but here comes the next question, which is positioning. Where are we going to long it from? Well, the first thing that I see right here is that daily imbalance aligning with this overall block here, like this overall consolidation, which later caused on a breakout. So this daily imbalance together with this overall block of orders here is going to be a very nice supportive level. Now, of course, if I'm to pretty much share my bias, it's going to look something like this, pull back into this daily and potentially continue higher, targeting new highs, right? And then, of course, I can start giving you all the scenarios, because let's not forget, trading is all about flowing. It's not about saying, all right, the market is going to go up. That is very wrong. I hope you did read my emails, though. I sent around 7 to 8 emails of my reflections for 2024. Let me know down in the comments if you actually read them. And pretty much then the next one will be, if this daily zone fails, then that is going to start guiding us towards the weekly. All right, so those are my two main scenarios, either long from that daily, but if the daily fails, I'm going to be looking for the weekly to get tapped, and then maybe from there to start looking for bullish alignments to take us higher. I'm definitely bullish on the dollar, so longs is the main thing that I'm going to be looking for. And then as we transfer onto the hourly time frame, there is nothing much. You can see Friday was quite slow, just making a little bit of a pullback. Right now, just setting up with that daily bullish imbalance. So let's see. I would definitely wait for Monday to pass, see how it pulls back into that daily imbalance, see if it starts giving me some bullish rejections, and then potentially Tuesday and Wednesday, if they're bullish trading towards this high, that could be a very nice trading idea. So that is the DXY overall bullish bias. We have pretty much two zones to go long from. Let's see how it goes. Euro-USD is getting very close to parity. This is pretty much the euro being equal to the US dollar, which is 1.0. Hasn't been here in quite a while, but I do remember the time when it actually reached that level. It popped up quite fast, right? Because the market usually doesn't really want to go. I mean, the euro against the dollar doesn't really want to dip below the 1 level. If you probably zoom out a little bit, how much it has been there, a lot of times it's usually staying above the 1, right? I'm not really going to go to 85, 86, right? But of course, if the dollar continues to climb, we can expect the euro to continue to decline. We're also having that monthly bearish imbalance, so pretty much the opposite of what the DXY did. A very nice bearish monthly trend. We do have this kind of reaction area to the left that the market is tapping into, but we already tapped it here in November. December is in sight, and right now January is already in sight, so I wouldn't really count this one as a supportive level anymore, because any orders that were resting here were already taken by this reaction. A very nice short opportunity here from that weekly zone in December, but you can see came in, chop, 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 and then yeah, eventually it reached. So if you were looking for some sort of swing trades, you probably did good. We don't have a weekly bearish. Oh, we actually do have one. Oh, nice. So hopefully some of you guys took a short trade from here. We have a very tiny weekly bearish imbalance. You can see on the DXY, the market did not really tap it, the bullish one. EU tapped the bearish one and very nicely reacted, taking a lot of liquidity right now. So there are a few things that right now you can be looking for. You can be looking for a new weekly bearish imbalance to really confirm that this downtrend is going to continue. Or you can go to the daily time frame and see if you have something there, which again, similar to the DXY, we do have this daily bearish imbalance. That is aligning overall with that liquidity that is being taken, because this whole area right now kind of turns into a very big block, right? You also have, for example, this very big base, right? Drop, base, drop. This is kind of a supply and demand concept that I'm using. And yeah, so bullish on the DXY, bearish on the euro. I will be looking for the market to pull back into this daily zone and start giving me really bearish sentiment. Start seeing the hourly time frame get bearish. Start seeing the 1 hourly time frame get bearish. And then, of course, I'm going to be looking for the shorts. Surprisingly, 2nd of January here, a very nice sell-off. 4 hourly bearish imbalance into the liquidity just dropped like crazy here on the 2nd of January. Very nice for the start of the year. But definitely I wouldn't like to be trading on the 2nd of January. Probably a lot of us are still drunk, right? So let's see. This is the only thing that I'm seeing right now on Euro USD because it's already tapped that weekly imbalance. I wouldn't really look for the market to pull back all the way up there. So if this daily bearish imbalance holds, I will definitely be looking for shorts targeting these lows here. But if, for example, that daily imbalance doesn't hold and starts building some bullish order flow, I will definitely then be looking for the opposing liquidity. Okay, so that's Euro USD. I'm gonna say definitely more bearish than I'm bullish. Let's see how this daily zone responds. Let's see if the sellers continue to hold price. If not, we're gonna adapt and we're gonna simply target the opposing side. I haven't traded GU in quite a while. We can see on the monthly time frame we do have also very small monthly bearish imbalance, suggesting that currently the sellers are in control. We are still to reach for that liquidity level here, which is a monthly swing point. We're getting closely there. Dropping to the weekly time frame, we similarly had that weekly bearish imbalance like on EU. We tapped it and we had a very nice first week here of January. Crazy, very nice expansion, getting us very close towards that liquidity. So if I'm to target something on GU, it's definitely going to be that low. Although, again, for example, EU already reached that low and it already, no, EU, I think this is the low that GU has that hasn't reached. No, it's April. Doesn't really matter, all right? We're targeting potentially that low. Now, how can we get towards that low? Well, of course, we drop to the daily time frame and the weekly currently is bearish, being respected, printing a daily bearish imbalance with a very nice expansion here on the 2nd of January on Thursday, creating a daily bearish imbalance, creating this block here. It's not really an order block because the order block will be here the last bullish candle before the drop. This one is more like what is called like a mitigation block or just a break and retest level or just a drop base drop, right? It's so many names to call it. It really doesn't matter what you call it. It's important to understand just the psychology behind it. The accumulation, then the drop, and then usually when the market returns back to that level, a lot of people would like to add in more orders, which is then likely going to push the market lower. So GU looks like a textbook perfect setup for something like this. For us to pull back into that daily, to start getting the short sellers in and then target that liquidity. Now, do we have any sort of news to potentially push the market that low? Well, we have NFP. Apart from that, especially for the pound, not as much. You can see here Friday closed in a very choppy manner. It just made a little bit of a pullback after that massive drop. So let's see how the market is going to get into that daily level. And of course, it's going to be very important to wait for it to get inside and then wait for the 4-hourly time frame and for the 1-hourly time frame to start showing you bearishness. Because you don't just want to say, oh, daily bearish imbalance, I'm going to short it from here and target the low. No, you really want to see the market shift bearish, start actually aligning also on the lower time frames here. And then, of course, get into your entry pattern. So that is GU, very similar to EU, looking for shorts. We have a liquidity target. We have a daily bearish imbalance to use as a zone to trade from. Let's see how it goes. All right, looking at Aussie dollar, a very nicely bearish monthly candle of December, closing very nicely below this liquidity level. Potentially already looking into the next one that is getting very close. I wonder if on another broker it was actually taken. Very massive expansion on the monthly. Dropping onto the weekly time frame here, we also have a weekly bearish imbalance that was not tapped. So in a situation like this, you can potentially expect that the market can potentially pull back into that weekly zone. So let's see about that. And then dropping onto the daily, we pretty much had that expansion. Like you can see, it was all choppy here, all choppy. And then pretty much we had this one day here on the 18th of December that really dumped the market. And then pretty much this made, like if you measure that candle here, which is like 120 pips, you can see the market didn't move 120 pips for quite a few days here. And then it just with one day, it moved massively. So currently, unlike EU and GU, which have a daily bearish imbalance, this one does not. Like it after that massive drop, it got all choppy once again, right? So currently, the only thing that we can look for is for that weekly imbalance to slowly get retraced to, and then from here to start seeing like the 4-hourly time frame, the daily time frame start getting bearish, and then target into that liquidity. But another thing that I see happening also is first take the liquidity, and then use, of course, all the orders generated below that liquidity to then pull us back into the weekly imbalance. Okay, so when it comes to AU, definitely not one of my favorite. Like EU and GU looked a lot better. They're all bearish. I'm not saying that this one is bullish. It's absolutely bearish, but we don't really have a zone to work with. We have daily zones on EU and GU here. All we have is that weekly zone. And then if I drop to the 4-hourly time frame, god damn, this is choppy here. Nope. So I'm not gonna be trading AU right now. I'm definitely gonna give it some more time to see what it wants to do. Does it want to reach for the liquidity? Does it want to reach for the weekly imbalance? If it first reaches the weekly imbalance, I will definitely be looking for shorts into the liquidity. But if it first reaches the liquidity, I will then be looking for 4 hourly bullish shifts, 4 hourly bullish imbalances to then target the imbalance. All right. So those are my two situations, but immediately into next week, I'm definitely not trading AU. XAUUSD probably quite similar. We are massively closing below this liquidity level. Right now, you can start targeting potentially this massive 0.55 level here, which fully reversed the market and then kept it in the consolidation for a very long time. So are we gonna dip below here? Looks like it. Super massive December candle. It just makes sense for the next candle to maybe give a little bit of a pullback and then continue dumping. Jumping onto the weekly time frame, interesting here. So Aussie dollar did not pull back into that weekly bearish imbalance. You can see it's actually, I don't want to say it's far away from it, but it kind of is. This one perfectly pinged it here. Are the brokers the same? Yeah, FXCM. Okay. It perfectly pinged it here, and right now it's already looking bearish. So currently what we have to see is also the lower time frame to start showing us bearishness. But then we drop to the daily time frame. Yeah, sure, it tapped the weekly here. It gave a very nice short. It didn't make a new daily bearish imbalance, which is not nice because right now you wouldn't really have any zone to take a short from. Like you can see, it's very choppy. There are no imbalances being created here since the 19th of December. So it means that pretty much momentum is non-existent. And then we drop to the 4-hourly time frame, and again, like how the market closed here within the last the last few days, although we have the Tuesday and Thursday only and Friday, quite choppy. All right. So when it comes to NZUSD, kind of not sure what to expect because this weekly imbalance is already pinged. So I wouldn't really expect for the market to come and retest it again. That would definitely mean the market is returning bullish. Okay, so that could actually be one scenario for the market to like invalidate that weekly and start pulling back higher. Of course, like above, we have another weekly imbalance, and then that weekly imbalance is also aligning with this order block here, that last bullish candle before the drop. So that could be kind of the next resistance area. But of course, the thing that I would like to see is for this market to potentially continue going bearish on the 4-hourly time frame, creating 4-hourly bearish imbalances, and then targeting that massive liquidity level. Okay, but of course, as I keep saying, for the first week of January, let's give it some time. Let's see where it wants to go. Actually, let's wait to see for some zones to be created right now. I actually see the markets being quite good right now at the start of January. There is some momentum. There are some weekly bearish imbalances, but we really gotta wait a little bit more. So no zones to work with on NZUSD when it comes to the daily and to the 4-hourly time frame. So I'm gonna be looking for a zone to be created. I'm gonna be waiting for this market to show me where it wants to go, and only then I'm gonna tackle it when I'm certain of a potential bias, because right now I'm not. All right, gold lovers, let's see what we have on gold. So it's been tricky, I would say. It very nicely ran into the highs for quite some time, right? So let's not joke about it. It is massive. Like this year, last year for gold, it was absolutely crazy. So will this year also just massively continue to push higher, or is it gonna start consolidating? Like if you study it, like usually after a massive run, you start getting a consolidation, and then like you can see all the chop. Here we also have another massive run, and then it had a whole year, I believe. Yeah, even more than a year of a consolidation. And then once again, you have a pump. So just logically speaking, what is likely to happen right now? Maybe a consolidation. Okay, but of course right now the market has changed. Trump is about to get inaugurated right now, so could do many things, right? If the US dollar continues to be as strong, it wouldn't make a lot of sense for gold to continue going higher, because more people are going to put their money back into the dollar, right? So monthly bullish imbalance here, we have 1 tap, 2 taps here. It seems like it's not really offering a lot of support. You can see it kind of, it tapped it, it reacted. But then, of course, we had that very big supply and demand sandwich situation where we had that monthly bullish, and then we had a weekly bearish. And then as we dropped to the daily time frame, we had all of these bullish and then bearish and then bullish and then bearish. So what does that signify is a consolidation. And you can literally see it here. It goes up, then chops, goes up, then down, then chops, then up, then down, and chops. there is no trend currently on gold. I'm sorry to say, but it's not bullish, it's not bearish. We don't have a trend, especially within here the last few weeks. Like, for example, it looked quite bullish when we tapped into that monthly and when we printed that very nice weekly bullish imbalance, potentially to start targeting that high. But then since this week, since the week of the 25th of November, and pretty much for the whole of December, it didn't do anything, right? You can see the weekly candles, they're just choppy, slow, wicky, no direction. So what you really have to do on gold right now, I'm personally not trading gold. So for those who are trading gold, you really have to wait for a direction to get introduced, because currently it's so choppy. And for example, at a moment you see, oh, very nice drop here, break of structure, I'm gonna go short, and you try to go short, but right now the market is kind of starting to shift longs. Or then you say, oh, we're breaking structure, we're going long right now, which is how I would personally look at the market. That currently, for example, we're having that daily bullish imbalance together with this very nice daily order block here, these last two sell candles before the pop. I would say, well, currently on the daily time frame, buyers are in control, and I could potentially be looking for longs on gold. Does it make a lot of sense? Probably not, because if you remember, on the DXY we're also long biased, and then of course on all the USDs here we're short biased. So what makes gold long biased? It doesn't make a lot of sense. So that to me is a low probability trade. But this is the only thing that I see. And if you just track, like for example, a couple of imbalances back, here we had a bearish one to go short. It didn't go short, right? Here we had a bullish one here to go long. It didn't go long. So when you start seeing these imbalances fail, that simply means that there is no sustained momentum. There is no trend, because the trend is again a bullish imbalance created, pulled back into, respected, creating a new one, pull back into, respected, right? And that's what creates the trend. Right now, when you have one bullish created, disrespected, bearish created, disrespected, what is that? It's a consolidation. Okay, so I do believe gold is currently in a kind of a macro consolidation. What you can do, of course, is scalp it, like drop to your 1 hourly, drop to your 15-minute time frame and look for your intraday setups. But if you're looking for a high probability trade, we don't have it yet. Like even if I drop to the 4-hourly time frame right now, like it's in a push and a pullback phase on the daily. So I really want to see how this daily zone is going to react. Are we going to start seeing some bullishness out of here? You could definitely take like a very quick trade, but don't expect that the market is just going to rally and target these highs. Wait for the trend to get introduced. Wait for a couple of imbalances to be respected. Wait for a high, a higher low, and then a higher high to get created, right? To pretty much tell you that the trend is on. For example, here, push, pull back, lower high. If it made a new lower low, I would say, okay, we're bearish. But right now, it's literally not making anything. So I don't have a bias on gold. So I would say, let's wait a few weeks. Let's see where this wants to go. And then, of course, we're going to talk more about it. USD-JPY is an interesting pair to study. It tends to move quite nicely when certain fundamentals are taking place. Now we had a very massive December here, so is the market going to continue higher? Could be, right? Because the dollar right now is getting super strong. The JPY, of course, is usually a currency that keeps the interest rates low. So when the dollar is strong, this one tends to go quite nicely. Nothing on the monthly. However, what we have on the weekly time frame here is a very nice weekly bullish imbalance together with this overall. We have this weekly order block, but again, you can see the overall kind of whole break and retest area is this whole from the high to the low here. This is your whole kind of break and retest, your mitigation blocks, your break and retest zones. We're pulling back into that together with that weekly bullish imbalance. So to me, it looks like next week could already start popping higher. Now, if you study what is happening to the left, we have what I call a reaction area. What I mean by this is that the market can potentially react from this. This is an unretested weekly bearish imbalance, where potentially some orders can be hidden, so the market can tap inside here, react, and then if it's bullish, it's gonna potentially target the liquidity. But again, if you are encountering this area, you should either take profit here, or you should stop looking for trades, wait for a pullback, and then continue higher, okay? So currently we're tapping into that weekly imbalance. We already kind of got a little bit of a reaction. 3 days reacting from it, definitely kind of more on the long side of the bias, looking for this kind of high to get taken. But then the question comes in, like, do we have a zone to actually go long from right now? Dropping onto the 4-hourly time frame, we kind of had this very nice 4-hourly bullish reaction here, creating 4-hourly bullish imbalances. That is already an entry model by itself. And you can see this is what I mean to confirm a trend. So for example, going back to the gold example, high, higher low, higher high. right? So right now I can say that the trend is overall bullish on the quality time frame, although a lot of you may come and say, yo, structure is bearish right now. I don't look at structure anymore. I look at the most recent price action, the most recent imbalances, the most recent momentum, and the most recent order flow, right? Because right now you can also come in and say, oh, the market is actually bullish from here to here. Okay, sure, but that is way too long term. It's way too, I don't like it anymore. So again, just zoom in. And even though we were bearish here, you can see the market failed to make a lower high. It actually made a higher low, popped higher with a new imbalance. So to me, it's currently bullish, okay? Now, the last imbalance we had on the quality time frame. Now, I am already here on the quality time frame because we're already coming from a weekly bullish imbalance. So I'm using this as my macro zone, trying to target that macro liquidity. But then, of course, the next question is, how are we going to get in? Now we have this quality imbalance that currently doesn't look like it's holding. So what I'm gonna need is a new one. So I really want to see USD JPY right now pop higher, create. I can even go right here on the 1 hourly time frame to wait for 1 hourly bullish structure to start showing me that it wants to go higher, and then potentially you can target that liquidity, and then your next stop is gonna be that weekly reaction area. Okay, so USD JPY doesn't look like a bad pair, but we really have to see that the DXY is gonna appreciate, it's gonna pop higher. So it's very important to see the DXY respecting that daily zone. Because if the DXY respects that daily zone, that is gonna push USD JPY higher, and you're very likely gonna get some sort of a 4-hourly or a 1-hourly zone to work with. Okay, so that is my USD JPY bias. I'm definitely more bullish than bearish. I do need to see a zone being created though in order to trade into this high and then into that weekly reaction area. So let's see if my long forecasts are gonna play out. Let's take a quick glance at the other JPYs. So Euro Yen, you can see on the monthly time frame, nothing as much. I'm absolutely not touching these pairs. They tend to move on periods when you have like a correlation between Euro USD and USD JPY, but that is never gonna happen. Well, not never, but very rarely it's gonna be, for example, for USD JPY to be bullish and for Euro USD to be bullish, because that is when, for example, Euro JPY is also gonna go bullish. This is why those cross pairs, they usually consolidate. Now, currently, if we look at price action itself, nothing on the monthly. Dropping onto the weekly, we have this weekly bullish imbalance that is currently being tapped. Liquidity above here, and also, of course, liquidity here. Tapping into that weekly, but then at the same time, you can see right now why this is not a very good pair to be traded. At the same time, the daily time frame is printing daily bearish imbalances, suggesting right now that the shorter term is bearish. So in order for us to right now look for longs, we have to wait for this daily imbalance to fail, and only then look for a trade targeting that high. Okay, this immediately makes this pair a little bit low probability just because of that massive reversal. And how I also told you on gold, I'm currently not looking like a structure to say, okay, we are bullish from here to here, so I'm looking for longs. No, I'm also considering momentum and order flow, because currently the momentum on the daily time frame is bearish, and I wouldn't really go against it. I would wait for the market to start showing me bullishness, show me these daily zones are failing, and then I'm gonna go long. Not to say the quality time frame as well. Like hourly bearish, shorts here, hourly bearish. Currently, nothing much to look at, so I just don't like it. We really have to give this one time to see, is this daily bearish gonna hold, which means that it's gonna invalidate the weekly, and then we can look for liquidity here, or is this daily gonna get invalidated, pop us higher, maybe then use this daily as a reaction area, pull back a little bit, use some sort of an imbalance here as a zone, and then look to target the liquidity. So it's too many scenarios, so I'm just gonna let it stay like this. Let it, for example, play out for 1 or 2 days, see how it first responds from that daily zone, and then of course flow with it and see what direction is gonna guide you. GJ on the monthly time frame, you can see as well, like the last few months are just choppy, right? And that is the nature of these pairs. I even want to stop analyzing EJ and GJ, by the way. So if I don't get a comment right now that some of you are watching EJ and GJ, I'm gonna probably delete them next time. Weekly bullish imbalance here, similar to Euro Yen, weekly bullish. Of course, liquidity resting above, dropping onto the daily time frame. Same as EJ as well, we have a daily bearish imbalance, although it's just one. So on EJ, it was a lot weaker. It had 2 daily bearish. Well, here it also has 2, but this one is very small, very, very, very small. So again, in order for you to look for longs from that weekly bullish, you have to wait for that daily to fail. So you either gonna need like a very massive daily bullish candle like that to like really say that, all right, this daily imbalance, I'm not really gonna look at it. or you again need to see the market come in, kind of react, and then break the reaction and start printing hourly bullish structure in order flow to then say that you can potentially go higher. Hourly time frame, nothing much to work with. We again have this very massive bearishness here. Bearish imbalances are the last imbalances that were created, which means that currently sellers are in control. So again, I'm not short biased because we're tapping into a weekly bullish imbalance and I don't want to take a short after that. I'm also not long biased because currently the daily and the hourly time frame, the bearishness is in control. Okay, so the only time that I'm going to be looking for longs is if the market taps that daily, reacts, and then starts printing bullish hourly imbalances in structure. And then, for example, from places like this or even from places like that, you can then start looking for longs because then the market is showing you, right, that it's starting to shift the curve. So right now, for example, we're bearish, but then if it starts looking like bullish, targeting the liquidity above, then I'm going to be looking for a trade. So currently on the JPYs, apart from UJ, EJ and GJ, definitely not nice. They need more time. All right, let's check out the index futures. Now, this is something that I'm going to be mainly focusing right now in 2025 because I see a very big potential within the futures market. I have built a strategy that I have backtested over 500 trades currently. The win rate is high. The results are very good. So I'm definitely going to be tackling them a little bit more while keeping Forex a little bit more on the side, a little bit more focusing only on high probability trades from high time frame zones and potentially focusing just on 1 or 2 trades on Forex while looking to really scalp the future. So currently starting from ES, the S&P 500 index, we had a bearish month in December, kind of a pullback month. I did buy some stocks down there, of course, because we had, I think, around 6% drop. Yeah, 5.15 on this one, but on the instrument that I invest in, it was actually 6. Nothing to work with on the monthly. So there is no really monthly bullish imbalances. There is not a lot of momentum going higher, which is not a very good sign. And then as we also start to transfer onto the weekly time frame, it's kind of the same story, right? We kind of had this weekly bullish that failed. So we had this week here of the 16th of December that really dipped very nicely. And if you look closely here, we have a very small weekly bearish imbalance here. We can't even draw it. You can see if you don't see the sign, then that means it's very small. But what that tells us a little bit right now is that sellers are currently a little bit more in control. If we explore liquidity, now we have this low here, and we also have that low here that we can potentially look to for liquidity to be collected. But looking at this weekly candle, it looked quite bearish at the time, but then it just massively rejected. What did it reject from? Doesn't have anything. Then we drop to the daily time frame. We can see like the last imbalance we have is this daily bearish imbalance. So currently you can see weekly bearish, daily bearish. So sellers are more in control. Now this can, on futures, what I have found out is that your macro bias, like your weekly and daily zones, they don't hold as much importance, right? Because these are very fast markets. They tend to change quite rapidly. And a lot of times, for example, when sentiment changes, all of these zones are just being destroyed. This is why I have built my futures approach to be more focused on the lower time frames. So for example, 1 hour and below, what is really happening right now after the New York Stock Exchange market opens. So currently, again, I would see that on the macro side, sellers are more in control. We're having a very nice pullback here on a Friday. And then dropping onto the hourly time frame. So this is where, for example, it's going to start getting interesting. But if you look at it like at the past couple of price action here, it is an overall consolidation. It's not really a trend. It went up, it went down, and right now it's going back up. You can see that if you really zoom in at the very last things that are happening, we had a bearish imbalance here, together, of course, with your overall order block. The last consecutive bullish candles came in, reacted, and then started breaking the reaction, which means that if this bearish imbalance is failing, you can target the liquidity, and that liquidity just got pinked at the very final hours of Friday. Beautiful, right? Together with that, it also created the hourly bullish imbalance. So what I currently see, you can see right now the time frame relationships. We have daily and weekly bearish above us, and right now the hourly time frame is starting to give me more bullish signs than bearish. It's printing that hourly bullish imbalance. So what I can potentially forecast is tap inside here and drive us into that daily, and then maybe from that daily see if we're gonna start getting some bearish alignments, right? Or if we're gonna potentially react, break the reaction and start going bullish and start entering a little bit more into a bullish market, but then we're also gonna encounter that weekly zone. So those are kind of my two scenarios. Of course, always the scenario is that we're just gonna flush down and start printing some bearish imbalances on market open, and then we go short towards the liquidity, right? So here are all my scenarios, okay? I am not 100% on the bias right now. I really like how Friday reversed. I really like this hourly bullish imbalance. So I'm definitely gonna be looking for longs. But if the market fails massively, this hourly bullish, prints a hourly bearish, I will definitely also be looking for shorts, targeting the liquidity. So that is ES. A lot of things that could potentially happen. So when you usually have a lot of scenarios, it means that the market is a little bit 50-50. Let's see how the other indices are looking like and if they can give us a little bit more clue about the direction of the stocks. All right, checking out NASDAQ. We also have kind of, it's not really a bearish month. So for example, you can see ES actually printed a bearish candle. This one also printed a bearish candle, but it was quite bullish. Then it pretty much printed a rejection. Now, nothing to work with on the monthly. There are no imbalances. There are no order blocks. There is nothing. So the monthly time frame currently a little bit useless. The only thing I see currently is that it's actually taking out the previous monthly low, which is that weekly swing point. And now I see, for example, what ES was reacting for. ES did not take out this swing low, right? NQ did, and they both retraced, right? This is why it's always important to be monitoring all the indices, because if one does something, right, the other one is usually gonna follow. So that kind of makes me a little bit more bullish than bearish, but of course, let's see how the lower time frames are gonna look like. Nothing on the weekly time frame here, to nothing bearish, nothing bullish to work with. And then we drop to the daily. Now, it's very important to know that we already took that liquidity. Now, is there something bearish on the daily? Well, yes, there is. We have that daily bearish imbalance. Now, again, until we get there, the market is probably going to look very bullish. And I usually do not like imbalances like this. I usually like, for example, if you're having a bullish push, for the imbalance to be at the top of the range, not at the bottom of the range. Because if it's at the bottom of the range, the market is already going to print a lot of bearish structure, and usually that imbalance is going to fail. It's the same in the reverse. If I was to go short, I would love to see like an imbalance here, suggesting that the very recent momentum was actually bearish, not all the way up here, right? So that would make me a little bit hesitant to be looking for shorts from that zone. Now, if the hourly time frame starts getting really nicely bullish, which it kind of already is, you can see like even if you zoom in, the first kind of little hourly bullish imbalance we had was here. We did not have a hourly bearish. Like again, ES, hourly bearish, NQ, no hourly bearish, which means that NQ is actually the stronger pair right now. And currently, similar to ES, we're also ending with this hourly bullish imbalance here. Also taking the liquidity, but also closing above the liquidity. So again, comparing them both, ES, the very last thing it did is kind of sweep this liquidity high, all right? NQ broke above it, and then it had 4 more hours to kind of stay above it. So looking at it, I will definitely be more inclined to be taking longs on NQ, okay? So if it pulls back into that hourly zone, if it starts giving me bullishness, if it starts climbing higher, I will definitely be looking for longs, targeting that daily imbalance, then looking for a reaction of that daily imbalance, and then from there, evaluate. Is it gonna continue going higher, right, and print some bullish structure to start going long, or is it gonna start building some bearish structure to, of course, go short? So this is kind of my bias. I would admit I am more bullish on NASDAQ. It kind of looks definitely nice, especially after this liquidity was swept. Nothing to stop the market until that daily bearish imbalance. 4-hourly bullish zone to work with. I do like it. So let's see if some longs are gonna kick in the beginning of next week. Now, YM being the black sheep of the indices, it closed massively bearish last month. And right now we're opening, of course, so far it's quite slow. Now, why this is right now not bad, but why it sucks is because it has 2 weekly bearish imbalances. So what that means is that this index was very bearish. Like NASDAQ, nothing like this. ES just has one very tiny here, right? But YM, very bearish. So can this impact the other indices? Definitely it could. But yeah, sometimes YM is the best. Sometimes it's definitely a lot choppier. It is a very tricky instrument. This is why I'm mainly focused on NASDAQ and ES. Now, again, on this case, do we have anything on the daily? We have a very small one here. So they can definitely move, I can't even draw it. They can definitely move a little bit higher, I would say. So for example, all of them have that daily bearish imbalance. If it reacts and then if it gets into that weekly, of course, you're going to really step aside from YM and then just wait to see, is it going to react or is it not going to react? Because this weekly, those two weekly bearish imbalances, if the market reverses from here, that can potentially drag ES and NASDAQ with YM. Okay, so keep that in mind. Dropping onto the forward time frame, you can see here we don't even have a bullish imbalance. The others took out that high. NASDAQ closed above it. ES swept it so far. YM, it hasn't even gotten close to it. So YM currently is very bearish. It's very bearish. Now, do I want to go short on it? No, because I don't have a zone. Like if you look at this forward bearish imbalance, it's I'm not really gonna short from it because it spent a lot of time inside, and you can see right now it's actually being broken, so it's not relevant anymore. But I'm not also gonna look for longs because this one is definitely the weakest index right now. If there comes a time at which you look for shorts on the indices, then maybe YM is gonna be the best to take a short on because it's so bearish on the weekly. Like it's really bearish right now. So if there are any shorts that are potentially going to be provided, YM being the weakest index, that is the one that you potentially want to short. But as for longs, NASDAQ is the one to long. Okay, so I'm not looking for anything on this one. I'm definitely going to be curious whether it's going to also pick up some bullish steam and start climbing higher. But if it goes bearish, then potentially that is going to make the others consolidate. All right. Usually, if NASDAQ is bullish and YM is bearish, SES consolidates. Right? And usually when all of them are going together, that is when you get the best setup. So this is why it's always important to keep an eye on both three of them, on all of them, right? So that is why I'm not as interested as I am, for example, in NASDAQ, but let's see how it's going to move. Let's check out DAX. Sitting currently at a very massive high, right? It made all-time highs here and currently just resting at the very top, which is something that I don't like, right? I would definitely love to see some sort of a pullback here and then potentially to continue going higher. Dropping onto the weekly time frame, we're having a very nice V shape here. We're having that weekly bearish, which was kind of, it formed after that weekly bullish. So you currently have like this in and then out. And again, if you can right now start looking at structures though and say, all right, we're bullish. You can also look at, for example, this order block to the left and say we're bullish, okay? But who was in control the very last time? It was the bearishness. Weekly bearish imbalance, the market taps in, it actually gave a short. Now, I don't like this weekly candle. I would have definitely loved to see it like close a little bit more weaker so that I can say that I'm definitely more bearish biased. Because right now, again, you can see we tapped into that weekly, sure, but we didn't do much. On the daily time frame, there is nothing to work with on the daily. We have like this daily bearish imbalance that the market is still responding, by the way. So I'm definitely more bearish than bullish. Do we have anything on the quality time frame? Very choppy. Very choppy. No quality bearishness, no quality bullishness. Ooh, this is very bad. It needs time. It needs time. Let's wait for it to see if it's going to print quality bearish imbalances, because if it does, I will definitely be interested to be taking shorts into that low, taking into account we're coming from a weekly imbalance. But if it also prints bullishness, that is going to mean that this weekly imbalance is failing, and then we can start targeting like highs. Okay, so those are the two situations on DAX. Definitely not something that I'm interested getting into next week. Definitely going to give it some more time for more daily candles to print, and only then I'm going to look at it when it's a little bit cleaner. All right, let's throw a quick recap. Now, I'm not gonna lie, the market actually looks good coming into next week. We're having, for example, the DXY being super bullish. Monthly, weekly, and daily are all aligned bullish. And the very last one that we have here is the daily zone. We really have to see what this zone is gonna do. Is it gonna respect and push the market higher, or is it gonna get disrespected and push the market lower into the next supportive level? That is that weekly zone. Because this daily is gonna really determine what happens with EU. Because EU right now is coming from that weekly bearish, very nicely reacting, and also printing that daily bearish, which is again the very immediate zone that we can work with already starting from Monday. But I will definitely wait for Monday to form, see if it's gonna respect or not, and then potentially Tuesday, Wednesday, Thursday look for shorts if it's gonna get respected, because if not, then it's gonna get tricky. GU also looking quite bearish as well. Weekly bearish, daily bearish, the same zone here that the market is gonna test. So let's see, is it gonna react? Is it not? So my favorites pretty much are EU and GU shorts. AU and NU not the best, right? So they're very bearish on the weekly, sure, but Aussie dollar can potentially pull back into the weekly zone and then take a short. It can also take the liquidity and then pull back. It's too many scenarios. NZUSD tapped into the weekly and it's currently being bearish, but it doesn't have any sort of bearish zone to be working with. So we need to wait for one to form, or we need to wait to see an invalidation and maybe go higher. Gold is in a very big consolidation. Let's acknowledge this. It doesn't currently have a direction. It's really kind of in the middle of nowhere. Like if you just drop, for example, a box like this and you just take the middle, you can see currently it's like just oscillating in the middle. And if you want to take a long from here, you're going to be taking a long from the very middle of this price range, which makes this instrument currently low probability. But again, the very last thing we have is that daily bullish imbalance together with that daily order block. You can make a bet that it could go higher, but this is definitely not something that I'm going to be looking to trade because simply the macro direction right now is uncertain. The JPYs, especially USD JPY, looks pretty good. It's currently reacting from a weekly bullish imbalance on the daily time frame. There is nothing. So if the 4-hourly time frame or even the 1-hourly time frame start giving me something bullish, and if the DXY responds from that daily bullish imbalance, then that could potentially give us some very nice longs. So let's see about that. EJ and GJ, they need some time because, yeah, sure, they have a weekly bullish imbalance, but they also have a lot of daily bearish imbalances that are going to cause a lot of struggle for these two markets to go higher. Indices, there are, I would say, a little bit 50-50 right now. I am looking for more long bias, especially on NQ, pulling us back into that daily bearish imbalance through 4-hourly bullish structure. ES is also the same, but I have so many scenarios on this one. It can do a lot of things. But when I looked at NQ, after sweeping that low, printing a 4-hourly bullish imbalance here, it really shows me that it potentially wants to go higher. So I'm going to be mainly focusing on longs on NASDAQ, potentially longs on ES as well. Meanwhile, YM is being super bearish right now. So I would definitely not be looking to long YM, and I would definitely be looking to use it as a confidence, because if this one also starts going higher, that is going to boost the other two. And DAX is just going to need some time because it's quite choppy. So that's for this week. Doesn't look that bad. Let's wait for Monday to pass. Let's start getting slowly back into the zone. And of course, guys, I wish you a very successful first week of trading, a very successful whole year of trading. Any questions, type them down in the comments and let me know if you want me to make any videos and any tutorials. Give me some ideas and I'm gonna talk to you on the next video.